Hello traders, this is your trader's friend. Thank you for joining me tonight for another video. Guys, I'm so glad you could be here with me. I was going to remake the Forex step reminder video. However, I have precious comments on that video and wouldn't dare erase them. So I'm making a part 2. After making the first video, it occurred to me that I forgot to share with you the most important thing about steps, and that is how to enter a set of steps. So let's go over that now. If you are going to enter a set of bullish steps, you want to wait until price drops below the high and oftentimes below the close. So once you get a dip on that next candle, once your price dips down, that is the time that you want to buy. Now, where would your stop loss go? Your stop loss is going to go below the previous candle. And you're going to continue to move that stop loss as the candles close. Now, if you'd entered the market here and it turned into a bearish engulfing candle, then you would have gotten out. That's the great thing about entering in on the dip, because it makes your stop loss much smaller. Now as price goes up, you continue to move your stop loss to be sure to lock in some profit. Well, what if you enter this market late? It doesn't matter. If you entered this market after the close of this candle, you would want to wait until the next candle fell below the high and oftentimes below the close to buy that candle. And your stop loss is going to be right beneath this candle. And you're going to continue to move it up under each candle when it closes until you've lost your advantage. Now your bearish steps are going to be the exact opposite, in that you're going to wait until price goes above your low or above your low and close, which in this case it happens to be, before you short that market. Your stop loss is going to be above the previous candle. This is your entry candle. This is that previous candle. Now, once this candle closes and you move the stop loss, guess what? You're going to be stopped out. You're going to take a few pips. You're going to take a hit of a few pips. That's what I'm trying to say. But once price falls back below that close, you can go ahead and re-short that market for a great sweet profit, and you'll see that you've gained all of that back. And just like in the bullish steps, you continue to move your stop loss above the candle as it closes. So once this candle closes, then you're going to wait. Well, when this candle closes, you're going to move your stop loss above this candle. As the next candle closes, you're going to move your stop loss above that candle, and so on until you lose the advantage. Now guys, I want to take a minute to say that we are in the best business in the world. It's lucrative, it's recession proof. No matter who goes bankrupt, no matter what happens in the economy, guys, we can make money. This is a gold mine, and it's something that you are worthy of having. The wealth that the Forex market produces, you are worthy of it. Just be sure to trade a good system with consistent discipline. I know I talk about discipline all the time, but that is where real success comes in the market. Guys, you have the ability to do this, and you absolutely deserve the wealth that the Forex market brings. Now, let's go ahead and go back to a point that I made in the first video about not going back long until price broke above that area of resistance. This was where that old stop loss was. Now price has broken above this area of resistance in this candle. So once I see that resistance has been broken and closed above, then I want to enter on the next candle. Once price gets below the high and oftentimes below the close, which it did, it came right back here and retested that area of support before bouncing back. So you want to buy down here. Your stop loss is going to be beneath this previous candle, and again you're going to continue to follow as the candles close. Now just for fun, let's add a moving average and see if it gives us an additional advantage. And this is the 5-minute time frame. You know that my favorite moving average on the 5-minute time frame is my 10 SMA, so we're adding the 10 SMA on this, and you'll see the additional advantage that you gain once price closes above that 10 period SMA. You see how it comes back to retest it. Now it's support and it bounces back off and continues on in a bullish fashion. Here you got the strong break and close below the 10 period SMA. So if you wanted to wait for that close below, then you still get a good ride down. Now here it was really important, this area of resistance. So now you have double confirmation. Not only do you have a break and a close above this area of resistance, you have a strong break and close above that 10 period SMA, showing you an even greater advantage for entering that market long. Guys, I just want to remind you that you can absolutely do this. You can be successful at Forex, and you are worthy of the wealth that you seek. Have a terrific weekend.